Elevator Pitch with Jonathan and Mitch is made possible in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York.
Hi, I'm Tom Hughes, CIO at Reliant Real Estate Management. I'm here at the Pearl House in New York City to film Elevator Pitch with Jonathan and Mitch.
Welcome to Elevator Pitch with Jonathan and Mitch. I'm Jonathan Shine.
And I'm Mitch Berkey.
And guess what, Mitch?
I know what, Jonathan.
We have someone very special in the studio today.
We do. We are honored to have with us in the studio Tom Hughes.
Tom Hughes, who's the Chief Investment Officer for Reliant Real Estate Management. Welcome, Tom.
Thanks for having me. Appreciate it.
Okay, why don't we get started with, why don't you tell us a little about Reliant?
Yeah, absolutely. So Reliant Real Estate Management is a real estate firm that's focused solely on self-storage. We have our own self-storage management platform, Midgard Self-Storage. We own about 110 properties, own and manage throughout the Southeast, going up the coast, Colorado, Indiana, and continuing to grow within our current sectors. We'll do everything from ground up development, acquisitions with expansions, conversion opportunities. So we have a breadth of institutional partners, institutional management platform that we have, and we can do everything from core asset classes to value add acquisitions. And
So we'll get to the capital element, but you are fully integrated.
Fully integrated, yeah. So we have our own management platform, development team, GC team, asset management team, fundraising team, everything in-house.
And where are you based out of?
Roswell, Georgia, just north of Atlanta.
Okay, so when you say 110, did you say 110
110 properties, yeah.
How much square footage is that?
A little over nine and a half million square feet, about.
And markets, what states are you in?
Mainly in the Southeast. So Carolinas, Florida, going up to Virginia, a couple new properties, Colorado, Midwest, and continue to grow within those markets, but also expand into new markets as well.
Is that to stay close to the Georgia roots?
No, I think, the demographics of, we like of the Southeast mainly, and, continuing to grow within our footprint helps with economies of scale, things like that nature.
So in your role as Chief Investment Officer, it's getting harder and harder to find product.
Yes.
It's harder and harder to find land to develop on. So what does your day look like?
Yeah. I mean, we're looking at, dozens of deals a week, a month, and our hit ratio is probably in the single digits. I mean, for every, 20 deals we're looking at, we'll get to the next round, get to the best and final, and hopefully we can, execute an LOI and get to a closing stage. But, we're looking at a lot of deals, and there's a lot of new buyers in the space that make it even more difficult for us to acquire. So we're trying to find, not necessarily the needle in the haystack, but, deal flow and deals that can come to us. We feel good about. We're not getting too aggressive, and we're still making it work with how we believe we can finalize and finish out a business plan.
You have to kiss a lot of frogs. There are a lot of deals out there.
Yeah.
But how are those deals coming to you? How are you sourcing them?
Yeah,
are they coming to you? Are you aggressively out there?
A little bit of both. Yeah, I mean, we'll see all the brokered deals, the national brokered deals, and we'll see some locally brokered deals. Maybe a family had a storage facility in the family for a while and is going with their, commercial brokerage friend that doesn't even sell storage normally. So we have a lot of boots on the ground. Our brand, Midgard Self Storage, is out there. So sometimes we get deals off market that are, brought to us. And then we're, again, seeing all the brokered deals out there as well.
And what's the average size deal?
From a total deal size, let's say $12 to $15 million. So not huge equity checks, but that's, one of the positives in this sector, aggregating a portfolio to sell to, maybe a REIT or a larger private equity group.
And if I may, on the asset class, self-storage was not a core asset class for many years.
Right.
And it's increased in popularity.
Yeah.
And you've obviously focused on that. The mom and pop element must be significant because is it close to 2/3 of self-storage is still owned by mom and pops?
Yeah, it's about 65% is still mom and pop owned, so that's anywhere from 1 to 3 properties. So it's still very much a consolidation play in being able to acquire and take advantage of the mom and pop run stores, bringing our institutional management in and creating day one efficiencies really.
A lot of it with the families is obviously wealth transfer, but let me ask you this, why is self-storage so popular now? What happened?
I don't think anything necessarily happened, but we're all hoarders, right? We have to keep stuff. We don't want to throw away our mothers or our grandmothers' belongings once they pass, and it's one of those things that you'd rather keep it in a storage unit forever and then put it in a dumpster versus putting it in a dumpster right away.
Is it the mobility of the population? I mean, we see the U-Haul statistics where people are moving back and forth and so on. What do you attribute the steady and unmistakable growth of the sector?
Mobility is certainly an item. So you have the renter population. So if you're a renter, you don't have the basement, you don't have the garage to store things, you need more space. You're using the second bedroom as an office now post-COVID, and you need more space for everything else, the seasonal belongings. So there's a renter aspect of it, and then there's also the mobility, buying, selling, moving aspect of it. So when you're moving, you need that temporary storage. So that's certainly an aspect, and then
which never seems to stay temporary. I mean, what's the average? What's the average length of a?
Our length of stay is 18 to 24 months. So it's continued to creep up, and given the less mobility in today's current housing market, that's kind of crept up a little, which helps us in terms of increasing rate, getting that sticky tenant base, people staying in for longer. I'd say the other nuance item is, the U.S. population is, higher percentage is storing more, right? So the last self-storage almanac study that went through is almost 13% of households rent storage. So it's becoming a much more daily part of your life, of everyday family's life. So it's just an extension of the home almost right now.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York. Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
And you mentioned COVID. Do you think COVID had something to do with that uptick?
Yeah, absolutely. I mean, like COVID, for storage, there was the COVID, spike.
Everybody was buying on Amazon. They didn't know what to do.
Everybody's buying on Amazon. They're working from home. That was the big item, working from home. So they needed that second bedroom, or the extra space. So they needed to move stuff to storage. So we saw a huge uptick, which filled the existing supply of storage, but also brought new developers and new developments that, as of the last couple of years, increased the supply again.
So self-storage, not exactly a secret. We've said it's grown in popularity. But for our viewers who are still coming up to speed on the sector, how do you pro forma out an existing self-storage deal? It's not necessarily the classic rent per square foot.
Right. Yeah. I mean, we are looking at rent per square foot compared to competitors, but when we're buying from a mom and pop, it's hard because you don't have the data out there like multifamily or apartments groups have to be able to earmark and touch on rate. But we're going in and looking to see where that property is compared to the market and how much rent can we push going forward. So we get pretty granular in terms of the rent roll, and it's tough because you want a good balance of pushing rate, but you don't want people to leave, right? Again,
you're always testing that.
Yeah,
right?
You're always testing it. So, and we have enough properties, enough data to be able to look at what works, what doesn't. Test a small cohort first to see how it works. Can we increase 20%? Can we increase 30%? And then you can slowly roll that out through the entire property. And we've seen great success from that in increasing tenants from mom and pops because they're just cashing their checks on a monthly basis. They're not worried about what the competition's doing. They're worried about their own facility and keeping it at 100%. No one wants a property at 100% because that means you're not pushing the rate.
So now, still self-storage, as Mitch kind of alluded to, has become an institutional investment class.
Yeah, absolutely.
When was that inflection point?
I'd say as the institutional group started to focus on alternative, asset classes. I came from Harrison Street Real Estate Capital, which was one of the first institutional groups focused on the alts. The senior housing, student housing, self-storage. So I think
is that where you got your first exposure to self-storage?
Yeah. So I was at Harrison Street for about 12 years. So I led the self-storage platform there on the transaction side. I still worked on some senior housing as well, but I first started to get into storage at Harrison Street, and it's where I found Reliant as well. So Reliant was one of our partners at Harrison Street, and decided to join the team and continue to grow what Todd Allen and Lou Pollack started back in 2009.
So what made you get sold on the sector?
It's not like you woke up one day and said, "Yeah, hey, I want to be in self-storage."
I was thrown right into it, and I said, "Let's go," and all started from there. So prior to Harrison Street, I was at AEW working on senior housing, and when I came over to Harrison Street, it was continue to work on senior housing, and then hey, the guy who was working on storage is not here anymore. Go ahead. So it kind of hit the ground running. Yeah, exactly.
That's a blue sky opportunity.
Yeah, and now everywhere I go, since then, I see storage everywhere and everywhere I go, right?
Wow, that's got to be fun for the family on car trips, right?
Absolutely. Yeah, see that one? Oh, there you go.
So back to the business model
Yes.
for a moment. In addition to the rent, and I don't want you to give away too much secret sauce here, there are ancillary income elements
Absolutely.
in the self-storage sector.
Yep.
So share that.
Yeah, so we have a tenant insurance program. So we require our tenants to have insurance to cover the unit, so that you can buy those those policies through us, or you show us your homeowners or renters insurance policy that covers insurance. So that's a large piece of income that can come to the property. Some of the REITs take that for themselves. So, partnering with us and using us as a manager, goes to the bottom line for the property. You got the boxes, the locks, and we also have a component.
Don't leave out the tape, the packaging tape.
That packaging tape, yes, exactly. And the bubble wrap, all that stuff.
Yep.
And we also have U-Haul income. So we have, certain facilities have U-Haul trucks that you can rent. You rent online, but we have them at our facilities, so it helps.
pays you rent and for
Exactly.
the lot.
Yeah, we actually get a piece of the rental.
Oh,
Yeah, so in that, we like that because it drives traffic to our facility, right? You come rent from us, you can rent a U-Haul, store your stuff here.
full self-storage experience.
Yeah.
So at what point in your experience in the ascension of self-storage did it start to get the attention of institutional players on both equity and debt?
Yeah, I'd say probably in the 2017, 2018, I think when large institutional groups really started to get into the space, and when it's now part of the Odyssey Index. So that certainly helps the institutional piece of it. So it's part of the alternatives that people want, an allocation to storage, same as senior housing, same as data centers. So it's a small piece, but it's a way for them to diversify their portfolio in alternatives, and add storage.
So in terms of Reliant, do you have a fund structure now, or are you still on the operating company?
Yeah, so we have we've historically raised funds from private wealth, retail investors. We've raised funds from that standpoint. We're on our fifth fund. We're closing out our fifth fund. We have institutional partner that we've done stuff with Harrison Street. We have a family office as well, and we've also invested with syndication, small syndication, friends and family raises. So we're looking to continue to grow our platform, find some more equity on a go-forward basis to continue to grow our platform. From the fund structure side, and 110 properties to 200 properties.
So stay with that as far as game plan.
Yeah.
The old classic question, what do you want to be 5 years from
Yeah.
now? So I believe you shared with us that you're in the top 20 in the industry,
Yeah.
or at least in the
Yeah,
U.S.
17th largest
17th.
owner-operator, yeah.
So what's the game plan?
Get as close to the top 10 as we can. I mean, we're not going to be able to compete with the REITs that have thousands of properties, but we want to have, couple hundreds of property. 200-300 properties is certainly something that we could do over the next several years through aggregation, single asset aggregation. It's tough, but we have the team and we have the structure and we have the history to be able to do that.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York. Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
Understandably, there's a lot of consolidation in the industry right now. You just mentioned REITs. Public Storage just acquired, I think it was National.
Yeah, NSA, yep.
And so how does that affect what you're doing? Does that help? Does it keep properties off the market? How does it affect Reliant?
Yeah, I mean, I think the REITs, they're generally not sellers, so it kind of just supports our thesis of aggregation in primary, secondary, tertiary markets. I'd say NSA was secondary, tertiary market focus. So again, it supports our thesis of, a big chunk of our portfolio is in secondary and tertiary markets that, long-term, consistent cash flow is certainly something where you can find that in those secondary and tertiary markets. And, the consolidation, down the road is certainly what the REITs are looking to do. And, maybe when we're at 300 properties, we can go public, 400 properties, we can go public,
Well, let's take that a step further. Make a great point, Jonathan, and consolidation.
Yeah.
Where in the back of your mind, maybe let's grow this thing and maybe we'll get a knock on the door and someone will take us out?
Yeah, no, absolutely, man. I think that's certainly, feasible and something that, we've thought about. I mean, we have our own management platform, so we potentially lose that. So the other thought is, we could go public as well, or we could consolidate with a private equity group or a larger institutional group that's looking to make a splash and have larger exposure to the sector. And that's certainly a way for them to do it by acquiring or recapping our portfolio and getting 200-300 properties at that point.
And so you mentioned the Odyssey Index previously. Do you have an open-ended fund within your group?
We don't. No, we don't. Ours are all closed-end, value-add opportunistic funds. We've recapped, a couple of our funds in portfolios with opportunistic funds and open-ended core vehicles with our institutional partner, but we don't have an open-ended fund.
Okay, so moving forward, what does a day in your life look like?
How exciting is it?
It's very exciting. I mean, I've always been a deal person, so seeing new deals on a daily basis, multiple deals on a weekly basis is exciting for me. Might not be for a lot of people, but it's exciting to see, new deals. How do we make those deals work? How can we bring it into our ecosystem, our management, and add value, and try to acquire it? Work with these mom and pop owners and see what we can do to the property once we acquire it to add that value for our investors. So that's certainly fun. And then also working with our team on our existing portfolio. Where can we find value to add returns for our investors and ourselves on our existing portfolio, and push value there. We just put a new property insurance policy, master policy, and we saved 25-30% on insurance. That creates value right away, and it's just things like that to be able to find value for our investors.
Well, you're talking about existing properties. Let's talk about the development process.
Yes.
Of finding land and finding entitled land. Mm-hmm. How hard is that getting? Now you're competing with data centers in the world.
Oh yeah.
So that's got to be a stressor.
Yeah, it's tough. I mean, storage right now, again, 2018, 2019, we were all talking in the storage sector where developers are going to be selling selling for pennies on the dollar, these deals. COVID happened, everything got leased up, bailed all the developers out. And what did developers do? They continue to develop. So there was a big rush of new supply from 22 to 23. So the sector is seeing a lot of that new supply, over the last couple of years come to market. So that needs to be filled up. So we're continuing to do development, but in very select markets where it makes sense and there's a low square foot per capita, and we see the growth in those markets. So we're selective. So we'll do probably 2 to 3 developments a year. But where we really like the development piece is acquisitions with expansions.
So are you coming up against any NIMBY element, not in my backyard? Any pushback?
From
local
municipalities?
municipalities?
Oh, absolutely. Yeah, I mean, you guys wouldn't, I wouldn't want a self-storage facility, down the street from me there. I mean, although
that's an endorsement.
Yeah, although they're they're much more attractive than they are in the past. Brick exterior.
Yes.
They're much
the landscape now.
Yeah, they're much nicer. I mean, yes, the municipalities are starting to push back, which is good and bad for our sector, right? So it's getting harder to develop, but if you have the team like we do, the development team, the GC team, to be able to spend the time and effort and money on getting a site entitled, once it's done, it's irreplaceable, and high barriers to entry market, be great for the long term. So we're certainly seeing municipalities push back, moratoriums on storage.
What about urban versus suburban? So the classic suburban, I'll just stay with that, is standalone, it's landscaped, there's parking. Yeah. At least in the New York area, I'll give as an example, there has been a large growth in self-storage on an urban basis, where there's not the classic parking, but it's within a structure that was previously perhaps industrial warehouse, whatever.
Yeah.
Is that of interest to Reliant?
Yeah, we have some more urban properties, but I'd say we're primarily more focused on the suburban, locations and markets. We can build multi-story out there still. You can still have 3 or 4 story, multi-story climate, but you can still also have single story drive up, which is attractive for suburban as well. To your point, we've done conversions as well, big box conversions, old Lowe's or old grocer anchored retail centers. You can convert to storage. Obviously, those locations are very retail oriented, a lot of drive-by traffic.
Were they essentially standalone pads within a center? Or are you actually part of an integrated shopping center?
Both,
Really?
Yeah. You can be part of an integrated shopping center that, we have one in Jacksonville that there's 2 larger anchor tenants, and then our facility, I think it was an old Lowe's that we converted to storage. We've sold some of the out parcels to, Starbucks and others, so we don't need all that parking, right?
So you're buying the whole center, or are you buying?
Yep. Yeah, we've had deals where we've bought the whole center, or we've just bought, that. Grocery piece or the Lowe's piece.
So what does the future portend for the self-storage industry? Is it completely that we're just going to buy stuff forever and not sell it?
Yeah, I mean, I think it's.
What's your hold cycle?
Our hold cycle is generally 5 to 7 years, so we're value add opportunistic. But we also have partners and deals within fund structures that are longer term, forever hold. So those are just cash flowing assets, no lease up or value add component. But the fund structure that we have and most of the syndicated deals that we've done are more value add opportunistic. So we're going in, buying from a mom and pop, adding the expansion or creating the value and looking to aggregate and sell as part of a larger portfolio.
Are you getting any particular wish list from the institutional markets on what they'd like to see you do to make you, at least in their eyes, more investable?
Yeah, I mean, I think storage is one of those sectors where it's very demographic and needs based. So it's not necessarily there's some groups that want, hey, we just want urban or primary markets, right? Or we want to be in secondary, tertiary. But once you're in the space, you understand storage a little more, and you're like, okay, I get why and how secondary and tertiary markets still make sense as well. I mean, there's an aspect of every market that there's a growing population, there's renters, there's movers, buying, selling homes. So there's, I think, having that institutional management is certainly a piece that's attractive to the institutional investor as well. Having a large enough platform and enough properties to be able to scale, be able to use the data that you have outside of the REITs to be able to make informed decisions on your portfolio and the growth. We have technology, I'd say, is certainly something that's been on the forefront of a lot of sectors, and storage is certainly not a sector that doesn't need some sort of technology aspect.
Do you have your own proprietary prop tech?
Yeah, so we have our platform we use, our management platform. We use a couple different third-party, I'd say technology-based companies or groups. Not our own proprietary kind of tech, but we use revenue management system to use our own data to be able to help to make informed decisions on how much should we rent this unit for, how much should we increase this person for. But we kind of get that initial, hey, this is what you should do, but you still need that human element to say, hey, yes, this makes sense and this is how we should do it.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York. Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
Talk to us about that human element.
Yeah.
Is that based on decades of experience in the business, or where is that human element?
Yeah, I'd say it's the experience and then also the data we have, right, compared to, so we have our own data, and then we have data that we can scrape from the internet, web rates and things like that. So you can only get a certain amount of data from the outside world, but our own data that we have is, something that we focus on the most. I mean, we have a lot of properties within the same markets that we can, scrape data and say, what did this customer do? And this customer has been there for that long, so how much can we increase their rate? Are we going to increase the rate to a point where they're just going to move and go rent down the street? Probably not. They're not going to go ahead and rent a truck or spend a day and a half moving their stuff down the street instead of paying another $20, at our facility.
So, the term institutional investor is a very broad way of saying we need capital, we want capital, to put it in more delicate terms. Do like, for example, pension funds, are they looking at self-storage now
Yes.
versus, say, the endowment and the foundation?
Yes.
And so it's a different element when you're dealing with pension funds,
Yes.
state pension funds, firemen, and all that. What kind of questions are they asking you?
I'd say the biggest item is just to be able to, how do you get scale?
Okay.
In it, not necessarily, they'll dig into your property specifics and markets that you like, markets you don't like, climate control, non-climate, but be able to scale in the space, as you talked about, the average check size for these deals is, 12 to 15 million.
It's not a big check.
So it's hard. You can do a data center for, 500 million. So to be able to put more money into this space, into this sector.
Sounds like it doesn't get interesting to them unless you can show a programmatic basis.
Yes, absolutely. Yeah, and that's what we want too, and that's what we're looking for, and that's what we've done, because to be able to be nimble and aggregate on a one-off basis, you need to have that partner that understands the space, but also understands you're dealing with mom and pop owners, and they'd rather a quick close than something more drawn out and putting single asset level debt on a property. This is the buy box. We understand that the play is aggregating a portfolio. So go ahead and do what you guys do best. And I think that's what makes us attractive for these institutional groups and pensions. They don't need to be the sector experts. We're the specialists, right? We believe in you. You have your own management platform. You have your development team. You go ahead and do what you guys do best, and we'll be along with you along for the ride.
And so, what is the average amount of investments you make per year?
And so we'd like to do, and historically, it's been a little slower last year, just given some of the headwinds in the sector. But I'd say, we'd like to do anywhere from 15 to 20 deals a year. So let's say 10 to $50 million a check. So, $150 million, give or take, in deal flow is certainly something that we feel comfortable with. We could go ahead and, do more than that, especially if there's a core mandate, on a core mandate that some groups have, more just stable cash flowing assets, from a portfolio standpoint. That's where you're going to be able to aggregate a portfolio there, because you're paying that core pricing regardless of a single asset or 15 property portfolio. So we could grow even further there from that standpoint, and still even bring in some value add component.
I think we need to talk journey.
We can talk journey.
Let's talk journey. So Tom, you're growing up in beautiful Dover, Massachusetts, a little southwest of Boston.
Yeah.
You're watching your beloved Patriots.
And Red Sox.
And Red Sox. And Bruins.
Yes.
Celtics.
And Celtics.
Some of your peers in grade school want to be a police officer or an astronaut. Were you telling everyone you want to be a self-storage CIO?
No, I always wanted to be in real estate. I knew that. my dad.
I think that's in your blood, isn't it?
It's in my blood. So my grandfather started a residential real estate brokerage company in Dover, and then my dad took it over. My brother's actually involved now. So I knew I wanted to do real estate. I knew I didn't want to do residential brokerage.
Okay.
So I knew I wanted to do real estate, and I liked numbers. I like the economics, and so I was like commercial real estate in some form. I probably knew I wanted to do that more than earlier than most folks would. But so I went to Babson College. Took a couple courses in real estate with Babson. One of my professors, his wife was working at AEW and introduced me, and then being kind of right out of school started at AEW, and that's where the commercial real estate, institutional real estate aspect started for me.
And what were you doing at AEW?
So I was working on the transaction side, and then the GFC occurred. So they're like, we want to keep you around, we like you. You want to work on the asset management side? I said, sure, I'd love to be on the asset management side and help out any way I could. In hindsight, I think it was a great opportunity.
Going to learn a lot at that
for
time.
me. Yeah, so it was great for me to be able to see the other side of the transaction, not just upfront underwriting, making assumptions, models, and then passing it off. It was understanding, hey, this is the business plan that the acquisitions transactions team's giving us. How do we see it through? And that gave me some insight into, okay, well, when I'm underwriting a deal, is this achievable? How am I going to make this not necessarily easier for our team, but achievable and doable for our asset management team on a go-forward basis. So being able to understand the value we can create with this acquisition or this development, but also understanding, hey, the team next to me is going to be able to have to kind of see it through.
So at what point early in your journey did you meet the woman that would change your life?
At Babson College. Yeah, so
Okay.
I met my wife at Babson College. We were both working in Boston. I was at AW. She was doing consulting, and then she went to business school, and that's when I decided to start look for another role out in Chicago, and that's how I ended up
She went
at
to business school in
Harrison Street.
Chicago?
She did, yeah. That's where she's from originally.
Okay.
Yes. So she has her Bears, Cubs allegiances, and
And everyone gets along at home?
yes,
Okay.
very much so.
That's important.
Until they start playing in the Super Bowl or World Series, we'll see. I don't know if
Okay,
that will
it
ever
could
happen.
happen. Possible. So you live in Chicago now?
Yes.
Okay, and the winters aren't that much different than Boston, so
No,
you're
and I got
comfortable.
3 girls to keep me busy.
That's
so,
never a dull
yeah,
moment.
Yeah.
Yes.
Yeah. So we got next month there'll be 8, 6, and 18 months. So 3 girls.
Wow.
Yeah, a lot of fun.
You're gonna need a little bit of self-storage yourself.
Yeah, probably. Yes.
know.
yes.
Do they know what Daddy does for a living?
They do. At least the 7 going on 8-year-old, knows I'm in real estate. Doesn't like the aspect of me traveling, but she gets
sure.
it. Yeah.
Well, we like to ask all our guests to share one thing about themselves that nobody knows.
Ooh.
And this, Tom, is your chance.
To let the world know something nobody knows about you.
Oh my! Put me on the spot here.
No panicking.
I'm gonna need some
we're
time.
good.
It's all good. You're amongst friends, and no one else is listening. I hope that's not true.
That no one else knows.
Okay, somebody could know, but not everybody.
Just a few people.
Well, I went to, I am a season ticket holder for the Patriots, and my loyalty is very strong if you ask anyone. I did go to a Bears game and wore my grandfather's, he had a Bears jacket that I wore. And if 90% of my friends and family knew that I did that, they would
Disown
be
you?
in shock. Yeah.
Thought you were gonna
Not
say-
disown me, but be shocked that I did that.
You might get
so-
disowned.
First of all,
It's
why did
something-
your grandfather have a Bears?
He was just a sports. He was a sports
Oh,
guy.
okay.
He wasn't a huge, he was a
Okay.
coach. He coached at Brandeis University, and he was just a sports guy. So he had,
I
every
thought
team
you might say you
information.
wore a Boston Patriots
No,
coat.
I have one of those too.
Yes,
Yeah,
exactly.
yeah.
So we have
Not that crazy that people don't know, but to me, it's one of those.
that's crossing the line.
It is crossing the line.
Yeah,
yes.
especially in the family.
Yes,
Yeah.
yes, yeah.
Okay, we
Yeah.
won't tell them.
Yeah.
No, your secret's good
Yeah,
with us.
no, won't tell
It's
them
all
about this
good.
either. Yeah.
Are we ready?
I'm ready.
We're ready. We also have what we like to call the lightning round.
Yes.
Where we ask quick questions, looking for quick answers, get a little bit deeper into Tom Hughes, the person.
Yeah.
Okay, I'll start off. You're a Boston guy. Matt Damon or Ben Affleck?
Matt Damon.
Wow.
Like music?
Yes.
Okay. Boston or Chicago?
Ooh.
Boston.
Okay.
There's a theme here. There's a theme
I
here.
mean, I feel like I had to say Boston regardless.
James Bond or Jason Bourne?
I go James Bond, even though I said Matt Damon earlier.
That works.
All right. Let's see. Your least favorite? New York Yankees? New York Giants?
Giants. Yes.
I think that kind of sums it
That
up.
pretty
We have
much
a theme.
says we have a theme. He definitely is a Boston gamer.
Bad scars from the Giants and Patriots Super Bowl, that's for sure.
Oh, we have a gamer here.
It's all good.
That's all right.
Well, Tom Hughes, thank you so much for spending time with us today.
Yeah, thank you for having me. Appreciate
Tom Hughes, Chief Investment Officer, Reliant Real Estate Management. Thank you for joining us on Elevator Pitch with Jonathan and Mitch.
This episode of Elevator Pitch with Jonathan and Mitch was made possible in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York.